Hi guys, Nrupin here, and in this video we will take a look on stock picks by expert and hot stocks as per market summary report for July 2016. Before we take a look on stocks, here's little disclaimer, disclosure and note for FTC required for all investment bloggers as legal stuff. I'm not SEBI authorized analyst, I'm just investment blogger. Everything I say in my video should be considered as personal opinion, not a research report or recommendation by registered analyst. For expert advice, please seek SEBI authorized analyst. Next, it doesn't matter on which stock analysis is done, who did it and how analysis is presented. Analysis is just probability, so don't blindly invest in stocks without proper risk management plan. In case you want to learn trading stocks from me, then use link in description and send me your name and mobile number along with message that you are interested in learning and willing to take training as well as 30-day assistance. As cheaper alternative, you can join my course Trading with Technical Analysis on Udemy. The 50% discount launch offer is no longer valid. All promotional offers are handled by Udemy. In case you want to join and you see no promotional offer, then use coupon code the devil or YouTube123 to get $10 discount. Also note that Amazon India's 40% discount on all mobile phones offer will still remain available for this month. In case you are interested, use links given in description of video. Finally, as per FTC rules, I am bound to inform I am affiliated with all products and services mentioned so far in this video. Promotion, disclaimers and disclosures are done. Now let's take a look on stocks. So as per report, we have 3 techno fundamental value picks, 3 technical turnarounds and 4 value picks by expert. First, we will take a look on techno fundamental value picks, then on technical turnarounds, and then expert value picks. So the very first techno fundamental value pick on our list is Shilpa Medicare. It is a medical sector stock, and all medical sector stocks are high PE stocks. So no doubt it is trading a lot above its PE and book value. But here's balance sheet, and here you can see there is steady growth. There is zero unsecured debt, all loans are secured. Here we see net sales are growing every year. EPS wise things are little bad, but that's not big problem. On chart we can see that it has broke the resistance of 508 with good amount of volume. The second bullish price cycle is about to begin, and overall everything looks strong. So if you would like to buy this stock, then you can maintain an SL of 510 and expect some good upside. Target wise I can't really say anything, but if you want an exit strategy, better use a price channel. Exit as soon as this trend line breaks. The next stock on our list is Granite Industries. It is trading for 74 rupees and book value is 104, which makes it a true value pick. On other hand, on balance sheet we see constant growth in net worth. Secured loans are also growing with it, which means Granite usually takes a lot of loans to meet its order. On net sales, they improved till March 15. Last year they underperformed. EPS wise also the things aren't looking good only for this year. By the way, on chart sentiments are pretty strong. As we can see, the resistance of 62 broke with pretty huge volume, and it also appears like this is second price cycle. So here again you can use price channel to make an exit. The upside left appears to be extremely huge. So if you are planning to buy this stock, then you can maintain your stop loss at 55 rupees. Next stock on list is Dodgy Hotels and Resort. This can also be called as a true value pick since it's not trading a lot above its book value. 139 is trading price and book value is 56. On balance sheet things are pretty much okay, not too good, not too bad. The only thing that worries me are increasing secured loans, though they are secured but they are growing, but the net worth is not growing, which means the profits are very less. On profit statement we can see that there are increased sales, but those increased sales are not really adding to the earnings per share a lot. And as you can see, last year they actually made loss in spite of the fact they generated more sales than its previous year. By the way, for now everything appears in favor of this stock. On technical front, it is looking strong, but remember this stock have a huge risk attached with it. It has broken the resistance of 126 with extremely good amount of volume, and it can be bought at these levels with stop loss of 110. So that were our three techno fundamental value pick. Now the technical turnaround stocks are Jai Shri Tea Industries, and here as we can see it also broke the resistance. Big candle, good volume, and both price cycle indicator KSD and relative strength index are supporting the growth. So most likely Jai Shri Tea Industries is on verge of turnaround. Note that this is just a technical turnaround. Fundamentally Jai Shri Industry doesn't look really that strong, but if you are a technical investor and believe in technical stuff and can understand how to take entries, exit and targets, this is one of good stocks because it is a turnaround stock. Risk is extremely less, whereas expectancy of profit is extremely huge because the beginning cycle is the first price cycle, and most of the times there are at least two price cycles ahead of the first price cycle, so expected profit is extremely huge. Here we can keep our stop loss at 94 if you want to buy it. Next stock on list is PBA Infrastructure, also a technical turnaround. Here again we have improving strength. Price cycle wise things aren't really looking good. Again here we can see it broke the resistance of 17. By the way, on break there is very less volume. If we compare what was volume previously, it is hard to figure out the volume is more or not, therefore this adds to little risk on technical front. Next is that construction and infrastructure sectors are already underperforming, which means if this really is a turnaround stock, then most likely you can expect extremely good profits. Here again, if you are planning to buy this stock, then most likely you can keep your stop loss at 16 rupees. Next stock on list is Barak Valley Cement Limited. Here again, this is one nice breakout. It broke the resistance of 19 rupees, we can say that. And if you are planning to buy it here, then most likely you can keep your SL at 17 rupees. On technical front, KST is signaling beginning of new price cycle, and here too we have RSI strongly representing the stock is on verge of turnaround, which means if this also turns around, then most likely you will make a very good amount of profit on it. Now let's take a look on our expert picks. The very first stock on list is Thangmal Jewelry. There is a news around market that Radhakishan Damani bought this stock as fundamental value pick. Now overall, the stock doesn't really look anywhere strong on technical front, nor it is appearing weak. On other hand, when I checked its fundamental, I think Thangmal Jewelry is kind of very much overvalued. By the way, the overall prospects on which Radhakishan Damani was buying this stock is that everything is working in favor of jewelry sector. It said that the export duty, import duty, everything is favoring the sector. Also the excise duty that was imposed last year was reduced, which will lead to decrease in prices of gold and will increase profit margin for jewelry industries. On average, I don't like this stock at all and I am not in favor of this. If I would have been asked to buy this stock, then I would have rejected it because on technical front there is no strength nor weakness, and fundamentally on balance sheet and profit statement I don't find anything that should appeal me to buy this stock. Now the next two stocks both are recommended by Gaurang Shah. The very first is Dishman Pharmaceuticals. Now Gaurang Shah declared that Dishman Pharmaceutical is fundamentally strong. They are coming up with some new medicine in market which will help it grow in next 1.5 years. They had some US FDA issues that were solved and everything right now looks in favor of Dishman. Moreover, it looks like things will consolidate for Dishman Pharmaceutical for at least 1 year, then the upside will happen. And he gave the target of 212 for 1.5 years. So if Dishman breaks resistance of 172 next month, you can buy it and manage your stop loss at 156. Whereas if it goes into consolidation, then wait for it to break resistance and then buy it with a proper stop loss. The next stock is also recommended by him. It is HCL Technologies. Now, while recommending HCL Tech, Gaurang Shah made it very clear that this is extremely risky stock and the target he's giving is 980. He actually said this is very risky, so you shouldn't touch it if you don't know how to take entries and exit properly. He also recommended to keep a strict stop loss while entering this stock, which is very true. So if you want to take entry on HCL Tech, then that entry should totally depend on your own technical skills. Personally, I would not recommend to enter this stock unless you have really good technical skills. The final stock was recommended by Avinash Gorashkar. It is India Bulls Housing Finance Limited, iBull. Now Avinash gave this stock as fundamental pick. He said that India Bull Housing Finance mostly offers loan against property. Most of their customer base are first time home buyers and are expecting this revenue to grow to 34,000 crore in year 2017. On technical front, things are looking good, except there is no resistance break. So for this to work, we need a resistance break. Here price just touched the resistance line, but it failed to move above it. So if it manages to close above this resistance 804 with good amount of volume and very big candle, then most likely Avinash's target is not hard to hit. He gave a conservative target of 900. So that's it for this video. If you found this video helpful, then don't forget to like, comment, share and subscribe. With that said, thanks for watching this video and have a nice day.